This is Carolina Business Review. Major support provided by Colonial Life, providing benefits to employees to help them protect their families, their finances, and their futures. High Point University, the premier life skills university focused on preparing students for the world as it is going to be. Sunoco, a global manufacturer of consumer and industrial packaging products and services with more than 300 operations in 35 countries.
Right now, it is getting harder to tease out the difference between emotional partisanism and what is really going on in the economy and in business. Welcome again, and thank you for supporting the most widely watched and longest-running dialogue on Carolina business, policy, and public affairs, seen every week in every market across the Carolinas. While presidential election years do normally mean better stock market returns and even marginally better GDP growth, it does not necessarily have the same effect on personal balance sheets and business in general. We will look more closely at some of the issues going on in the Carolinas right now. And later on, we welcome back the President, Chief Executive Officer of Durham-based M&F Bank, Jim Sills.
Major funding also by Truliant Federal Credit Union, proudly serving the Carolinas since 1952 by focusing on what truly matters, our members' financial success. Welcome to Brighter Banking. Blue Cross Blue Shield of South Carolina, an independent licensee of the Blue Cross and Blue Shield Association. And Martin Marietta, a leading provider of natural resource-based building materials, providing the foundation on which our communities improve and grow. On this edition of Carolina Business Review, Joe Waters from Capita, Christopher Cooper of the Haire Institute for Public Policy at Western Carolina University, and special guest, James Sills, President and CEO of M&F Bank.
Welcome to our program. Joe, good to have you back.
Thanks
Christopher
so much.
Cooper, welcome. We hope you come back after this experience. And so far, we're not sure, given what's been going on before the show. But anyway, I'm kidding. Thank you. Joe, let's start with you. We've heard over and over from not just business CEOs, but also some public policy folks that there is a child care crisis going on in the Carolinas. We heard it first in South Carolina, and North Carolina's talked about it as well. As you well know, in June, federal dollars for child care stopped, and there was a lot of angst around how that's going to be filled. So, a couple questions, Joe. Is there a child care crisis? And what does it mean by crisis?
Sure. There's definitely a child care crisis across the country. I think the latest information I heard, 36 states, the cost of child care on average is more expensive than the average mortgage for families. So while we haven't seen as many programs, child care programs, close as might have been anticipated from the loss of those federal dollars, we certainly have seen that the cost of child care continue to increase on families. It's a real pinch for anyone who has children before school age, but it's also a pinch for those families who require after school care, which is often provided by child care providers, and especially here in the summer, families need summer child care so that they can continue to get to work.
Where's the, you delineate it well, but where does it start showing up as being a real issue? People don't go back to the workforce, not enough employees to come back. How does so on and so forth?
People don't go back into the workforce. We just did a survey, for example, where we found that 1/5 of all stay-at-home parents in the country are dads, and 76% of them say that they would go back into the workforce if they had a child care solution. So it's absolutely the case that parents are not going back into the workforce. They're dropping out of the workforce. They're cutting back on hours, all of that, because they don't have a child care solution. But at the same time, child care is great for families and kids. It brings communities together, and it certainly helps support when it's good, high-quality child care, healthy development, which will redound, the benefits to which will redound for many decades.
Dr. Cooper, the policy side of this is it's debated within General Assemblies, both in the State House in Columbia, but also on Jones Street in Raleigh. What is there a, it's probably not the right way to say it, but is there a sensitivity to filling the gap that the federal dollars will leave?
Yeah, I mean, I think there's a rhetorical sensitivity, right? I mean, we hear state legislators in North and South Carolina talk about it, but I think getting from rhetoric to policy solution is pretty difficult, right? I think it's particularly difficult in different parts of each state. So if you're in rural North Carolina, if you're in East LaPorte in western Jackson County, or you're in Denmark, South Carolina, it's not just about cost, it's also about availability, right? There may just not be enough childcare available, even if you could afford it. So it's a really multi-pronged problem that needs a multi-pronged solution.
I don't want to dismiss this, Joe, but we've heard, you know, we've heard that the sky was falling about not enough talent. We've got all these great economic developments, and now we can't find enough workers. But we've been hearing that for years. But yet, the engine chugs on, and the Carolinas continue to set records. Is childcare going to end up falling on deaf ears just like that?
Well, we certainly would have that concern, and we do not think that we should be having a sky is falling argument when the sky is not actually falling. But I think that this is an area, even if it maybe is not as acute a crisis as a lot of people have made it out to be, it's certainly an issue where there is opportunity to improve the lives of families, to support them, to give them what they need, to help them make ends meet. So, it is an opportunity for improvement, even if the crisis is maybe not as acute as it has sometimes been made out to be.
Dr. Cooper, so we are in election season. I think you'd have to not have a heartbeat to understand that. You would not have a pulse. It's high drama, it's high crimes and misdemeanors, it's a lot of back and forth. How much of what's going on now, now that we have a Democratic contender to the Republican contender for the president, how much of that is actually going to be felt in the elections in North Carolina?
I think a huge amount, right? Particularly in North Carolina. I mean, South Carolina, look, we know which way South Carolina is going to go, at least at the presidential level, before we count a single vote, right? I think that's pretty easy to understand. In terms of North Carolina, of every state that Trump won in the last election, his margin was the smallest in North Carolina of any of them, 1.3 percentage points. And so the movement from Biden apparently to Harris, we don't know yet what kind of difference that's going to make, but I don't think it's a crazy stretch to think 1.3 percentage points is at least a possibility. I don't know that we're going to see it in terms of polling, but the question is mobilization. Who does that decision get off the couch and to the polling place? That's where this election is going to be decided.
Is this a chance for those that make policy around family and more human sensitivity issues, Joe, and I'm looking at you, obviously, but is this a good time to start planting seeds around policy that you hope to come to fruition after the election cycle is over?
Absolutely. And what families are telling us they need support for, in addition to childcare, is housing and healthcare. And I think housing in particular, when you look, for example, at the data about when people choose and if they choose to actually have children, housing is the number one driver. So there's absolutely an opportunity for both strong family policy after this election cycle on either side of the aisle, but also a strong family perspective on policy. And I think in some ways the debate is moving in that direction.
Thank you for setting us up on the housing thing, by the way. That was the next bullet for me to check. But Chris, housing. So we've talked about affordable housing, which is really called workforce housing as well now. Is that same question for you?
Yeah.
Is housing going to end up being the beneficiary of whatever happens in the election year?
I think it's possible. I think part of the problem here, though, is that so much of these housing policy solutions are at the local level. And so much of our discourse is at the national level, to some degree the state level, and much less at the local level. So you said at the outset, and I agree, we're clearly in the election season. That's kind of code for the presidency, right? That's code to some degree for Congress, for the U.S. Senate, for the governor's races across the country. When it comes to who's going to be elected to city council in Columbia and Greenville and Durham and Asheville or in Silva, I think it's kind of a different question.
Yeah. Joe, about a minute left. Housing, has anyone kind of cracked the code for affordable housing? and is going in the right direction?
Yeah, I'm not sure that we fully cracked the code, but I think that the bottom line is we need more of it, right? And so really, I think there's a great opportunity for whoever's running for election at whatever level this year to be talking about what Derek Thompson at The Atlantic has called an abundance agenda. We need more of it. More of it will make it cheaper, more accessible for all families.
How did he describe the abundance agenda? What does that mean?
Well, essential goods like childcare and higher education have gotten more expensive over decades, while consumer products like toys and so forth have gotten a lot less expensive. And I think the question is, how do we make sure that those essential goods, childcare, healthcare, housing, higher education, and so forth, actually can get cheaper with more availability for families?
I didn't plan on this question, Chris. I don't want to throw your employer under the bus on this, but in Western Carolina, actually, one of the most affordable universities in the UNC system, let alone the country. But in general, that really, in a minute, is that whole higher education debate about the cost and value sans all the other living expenses that we have. In other words, higher ed, isn't it a different animal?
I think it is to some degree, but I think higher ed is too broad a term. I think, as you said at the outset, not to say too many good things about my employer, but we have $500 tuition per semester, right? The UNC system in general is pretty cheap. The University of South Carolina system, you want to go to Coastal Carolina, you want to go to the University of South Carolina, you want to go to Winthrop, my alma mater. It's not nearly as expensive as I think we see the headlines, which tend to focus on Dartmouth, Brown, Harvard, Stanford. Yeah, guess what? They're expensive.
Yeah. Okay, thanks. We're going to bring our guest on and continue the conversation. Before we do that, coming up on this program, he's been here before, he'll be here again. He is the president of the Richmond Fed, and his name is Tom Barkin. Tom will join us on this program to talk about, of course, the economy, interest rates, where we're headed, housing, et cetera, and also a fairly new job for him. He is the Secretary of Transportation in North Carolina. His name's Joey Hopkins. Joey will join us about infrastructure and about transportation in the Old North State. With over 30 years now experience in banking and technology, and for a decade now, our guest has led the second oldest African-American financial institution in the United States. It was established in 1907 in Durham. Under his leadership, M&F Bank continues to serve chronically underserved communities and has received significant capital investments to support its growth and its mission. And now the president and chief executive officer of M&F Bank, Jim Sills. Jim, welcome back to the dialogue.
Thank you, Chris. It's great to be back.
Well, especially great to see you in person because you were so kind about doing it remotely when we were all living in somewhat fear and kind of holed up at home. But thanks for joining us, Jim. Good to see you. Jim, let me go to something you've been doing for a while. 4 years ago in 2020, DEI became front and center for a lot of folks. You've been doing diversity, equity, inclusion, banking, getting a lot of people around the water cooler a long time before it became something more politically charged. But as you've run the bank now that has mostly people of color, that deal mostly with people of color who are clients of the bank or customers of the bank, how do you see diversity and inclusion now versus what it was like even 4 years ago? How do you manage through it and go forward?
You know, it's unfortunate that the pendulum has swung a little bit to the other side for DE&I, but our bank is still committed to diversity, equity, and inclusion. We just think it's a part of our mission. The bank was founded over 117 years ago because there weren't minority banks in the communities where African Americans lived and worked all across the country. But to answer your question specifically, we have kept our foot on the gas, so to speak. There are so many people that need our assistance in terms of providing access to capital. So we're still focused on diversity. We want to have a diverse staff. We're focused on inclusion. We want our non-minority employees to feel welcome. We service everybody in the community, and we're in the equity business. We're in the lending business. We're here to provide access to capital, and there is still a great need to provide access to capital. And I think you all know that some of the larger institutions, even to today, still discriminate against certain demographic groups.
Joe?
Yeah, I'd love to talk a little bit about economic opportunity and access to capital. I think we tend to think about that in terms of individuals, whether it's the individual consumer or a particular entrepreneur. But I'd love to hear your thoughts about how y'all are making sure that capital gets to whole communities. Place-based solutions are a little bit more in vogue, and y'all might be thinking about that, or you might not. I'd love to hear your thoughts.
You know, we're a CDFI, a community development financial institution, so we're focused on providing access to capital to African Americans. We've also received over $100 million in capital over the last 3 years, and so those shareholders want us to continue the mission of providing access to capital. So we have all kinds of programs related to SBA. We do a lot of hand-holding of our customers. We also provide technical assistance. We also partner with the SBDCs all across the state. And so we just think it's a combination of creating an ecosystem of making sure people understand that the capital is out there, but you have to have a little bit more education, a little bit more training, and the foresight to just keep going, because it is a tough economy out there for certain industries.
Yeah, I was kind of wondering more about this DE&I initiative that y'all have. Obviously, there's been an attack, as Chris says, kind of nationally against these kinds of programs. How do y'all fight back about that, and how do you communicate the importance of it to people who may not come to the table with that assumption that it's a good thing?
I've been in this business a long time. I've been fighting this fight for quite a while. I'm going to continue to fight the fight. Our shareholders want me to continue that fight, our board of directors, our management team. It's just important to me personally. I've seen the difference that DE&I makes in communities, but also in financial institutions. And having diverse customers, having diverse employees, having diverse minority supplier businesses, I just think it's important for the community, because you're creating economic opportunity, they're paying taxes, it's lifting all the boats, so to speak, in that community, and I just think that's important.
You come from Bank of America, you come from MBNA, you come from banking years before you got to Durham and M&F Bank, and it was technology. A big part of your career has been technology. AI is everywhere. You've got, M&F Bank, Jim, has announced you have I'll call it a partnership, but you're working with Encino, which is also in North Carolina.
Yes.
And they're going to be on this program to talk about this as well. But the idea of using cloud-based FinServe, FinTech, all kinds of brand new AI applications in banking, how do you hope to leverage that? What value does that bring to the end user of M&F Bank, do you think?
Yeah, that's a great question, and thank you for that question. We've been on the Encino platform for 2 years now, and our goal is to do more lending in the communities that we serve. And so by utilizing a cloud-based solution, we can access their application through all different kinds of devices, your phone, an iPad, your laptop, it doesn't matter, anywhere at any time. And it's a very efficient system. All the data is contained in one place. It has built-in workflows. So it actually allows us to be just as competitive as some of the larger institutions. And our goal is to be able to leverage this system to generate $100 million in loans on an annual basis. We're not there yet. Last year we generated about $79 million in loans, but we want to be more efficient on how we generate capital out into the communities that we serve. And from an end user standpoint, they'll be able to submit all their documents to us electronically very efficiently. And so they will also be able to track what's the status of their loan during the process. So it actually levels the playing field for us with some of the larger institutions.
How do you make sure the integrity of the security of not just the relationship with that banking client, but with as many attacks that banks have now by other countries trying to get into their servers? How does AI make sure that that's not fungible, but you actually can keep the integrity of those security walls in place?
We have all kinds of cybersecurity tools. We utilize all types of vendors for cybersecurity. That particular solution and many banking solutions have all kinds of protection mechanisms built into it. I'm not saying that we're never going to be hacked, but Encino has invested millions and millions of dollars to protect that data because we're all accessing it in the cloud.
Joe.
Access to capital, you told us what the bank is doing. I'd love to hear your perspective on what some of the policy barriers are, particularly at the state level in North Carolina where you all are based in terms of access to capital for underserved communities.
Joe, there are so many programs that the state of North Carolina is currently offering through CDFIs, through the Department of Commerce with the, I think it's SSBI program that the U.S. Treasury funded about $100 million into the state. There are other loan funds that are in various parts of North Carolina and South Carolina that are providing access to capital. We're partnering with the North Carolina Rules Center. So there are a lot of entities that you never hear about because you always hear about these big financial institutions that we all know and love. But there's a lot of capital that's out there. We just got to get the word out that there are other entities that actually provide access to capital to small and medium-sized businesses.
Dr. Kruber.
Yeah, I mean, I think in general, how do you think the state of North Carolina does in helping people like you do the good work that you do? In other words, if you could sort of rate our state government or think about how well our state government helps you fulfill your mission, kind of where would you put it and how has it changed since you've been in this business?
Great question, Chris. We really partner with the state. We have to do more in terms of partnering with the other community development financial institutions that are all across the state. I would rate North Carolina high as a state that really wants to attract business here. It was the #1 state for business 2 years in a row. I think we've gone down to #2 recently, but they're doing all the right things in my view. The larger institutions, the regional banks and the community banks are all doing the right thing to support small businesses all across the state. I think you all know that small businesses are the backbone of the economy. So we have to continue to do more to provide access to capital.
You know, we talk about interest rates and the cost of capital as being one thing, and everyone's is laser focused on, well, the Fed should drop rates, or no, the Fed's not going to drop rates, the economy's not going to slow. But interest rates are one measure. So, Jim, if the economy, or I really should say when the economy slows down, what's your model? What do you have on the books, or what do you have modeled out to say when it does get slower, this is how we're going to pivot or move or get ready?
It's actually slowing down now. Loan demand for us has been down all year. Loan demand, generally speaking, for most banks has been down.
By what multiple about?
I would say for us it's about 15 to 20%
Okay,
down.
so meaningful.
So it's meaningful. And we measure the number of applications that we received year over year, consumer apps and also business applications. I just think it's a situation where you have to have diverse income streams in your bank. You also have to be more efficient, and so utilizing technology to be more efficient, to provide the answer faster, but also to close the loan faster. There are other programs that we're going to be leveraging, like SBA. We're an SBA 7A lender, so that allows us to give some flexibility to borrowers who may not have all their ducks in a row to get access to capital. So those are some of the things that we're going to be doing, and we think we got to continue to push that. I'm going to share with you a statistic. A business owner is more likely to help reduce the wealth gap than a consumer. And so that's very important to us that we support small and medium-sized businesses. So the wealth gap between a majority business owner and a minority business owner is only 3 to 1. Versus on a consumer side, it's 12 to 1. So we think that's our niche, is to focus on small and medium-sized businesses to reduce that wealth gap faster.
Do you get the sense, and sorry guys, we're gonna run out of time. Are you worried about debt levels, personal debt levels? Are you worried about corporate debt levels, business debt levels? Because they're pretty high, and the rates have gone up. So obviously the burden of paying a loan is more. But is that something that's hanging out there for you?
That's not hanging out there for me. Most banks do a really good job of underwriting credit and not overextending someone. Now, credit card debt is up by a lot. I'm more concerned about the national debt. the 34 trillion. That's concerning more than the debt on businesses and or consumers.
Is the general, and I'm sorry, we are almost out of time here, and I don't want to ask you the big ones and go, oh, by the way, Jimmy got 10 seconds. Can you nail it? Do you think most people are optimistic about the short-term future? We've got about 30 seconds.
I would say yes. The economy is slowing, inflation is coming down, job growth is okay. It's not great, but I think most people are still optimistic that we're going to have a soft landing.
All right, Mr. Sills, thank you for
Thank you,
coming
Chris.
into the studio this time and traveling in from Durham. Nice to see you.
Good to see you. Thank you.
Thank you.
again.
Dr. Cooper, hauling it over from Western Carolina and Silva, that's a drive. We appreciate you making that
Thanks
drive.
for having me.
Thank you. And of course, Joe, always coming in from where Blowing Rock and South Carolina, we appreciate that as well. Thank you.
Good to see you.
Thank you for watching our program. If you have any questions or comments, please email us or follow us on whatever you like to follow. Until next week, I'm Chris Woody, and we hope your weekend and your business is good. Good night.
Gratefully acknowledging support by Martin Marietta, Blue Cross Blue Shield of South Carolina, Truliant Federal Credit Union, Sunoco, Colonial Life, High Point University, and by viewers like you. Thank you.